Welcome and thank you for tuning in. You're listening to the Beyond 50 radio program. I'm Daniel Davis. Well, here we are. It's tax time. That's right. April 15th is just around the corner, and many of us are scrambling to get all the information we need together to file that successful tax return. Although there are some of us out there that might straggle and look for extensions or may just put off doing it altogether, we realize the awesome power the Internal Revenue Service has over the citizens of the United States. But don't surrender to that power so easily, because in the United States Constitution there are regulations and provisions that help protect citizens from the awesome reach of the Internal Revenue Service. Joining us here on the Beyond 50 radio program today is a professional expert with more than 30 years of experience who has been the nation's leader in taxpayers' rights defense and IRS abuse prevention and cure. He is regarded as one of the country's premier tax experts in IRS procedures, has developed countless of thousands of citizens solve personal and business tax problems they thought they might never be able to have solved. He is author of 11 books, dozens of research reports, and hundreds of articles. Today we're going to be talking about his book, How to Win Your Tax Audit. It's an insider's guide to successfully negotiating with the IRS. And I'd like to welcome back to the Beyond 50 radio program, Dan Pila. Dan, thank you for joining us back here on the program again.
Hey, it's my pleasure, Dan. Thanks for having me.
You know, this book here was one of those I remember when I first opened, I go, oh man, look at all the words and the codes, and I just put it down, and then I went back and I picked it up again, and you start reading this, and you have a way of really laying out what could almost seem like dry and overwhelming information in such a way that you find yourself starting to get your blood boiling. Then you find as you read more and more, and you're like, I never knew that we really, and I say this lightly, don't have as much to worry about as we think we do when it comes to the IRS.
Well, you know what? That's a good point, Dan, because and what you've illustrated is exactly what happens when you just get a little bit of information about what your rights are. See, the biggest problem is the IRS doesn't tell people about what their rights are. The IRS makes people believe that they can just run you over, they can do anything they want, that you got to turn your pockets out if they show up at the door, and that's just simply not true. When you understand what your rights are and understand what the IRS's limitations are, they can't run you over, and you're going to keep your money in your pocket where it belongs.
Mm-hmm. Now, what I'd like you to do for the listeners, because there's sometimes sort of a yo-yo effect when it comes to what the IRS is and taxes, and the first thing is you talk about how it was formed back in 1916, but we tend to have this thought of, well, taxes were supposed to be voluntary. They pretty much during World War II decided, well, we're going to take them out, just to kind of fund the war and be sure that we have that kind of thing in place, but afterwards, we were supposed to revert back to a point where it was supposed to be voluntary.
Voluntary is not the right word, Dan. Temporary.
Temporary. Okay. Let's go ahead and kind of open that up a little bit so people understand really what's going on there.
We talked about the creation of the income tax in 1913 when the income tax system was created. It was a tax that was only on the extremely wealthy in America, and by that I mean the lowest tax bracket didn't kick in until $25,000 worth of income. Well, in 1913, $25,000 worth of income is probably about 10, maybe 15 times that today, and so that was the lowest tax bracket. That was the opening tax bracket, and so up until World War II, the income tax never touched any more than about 1/10 of 1% of the population. The overwhelming majority of Americans never filed tax returns and never paid taxes until the Victory Tax Act of about, I think it was 1942 or 1943, I forget which year they passed that, and that was supposed to be the temporary tax, Dan. That was the one that was supposed to fund World War II, and as soon as the war was over, the idea was that the tax was going to go away and it would revert to pre-war standards, where again, fewer than 1/10 of 1% of Americans would have any contact with the Revenue Department. Well, the fact of the matter is, as soon as Congress got its hands on that money, Dan, they didn't let go of it. Federal revenue exploded, as we know, and so did federal spending, and that is the point at which federal spending went crazy, because they had the money available to them, and once they got their hands on the money, they would not let it go, and we know what has happened to the federal budget and federal spending and federal debt ever since.
Oh, we certainly do. Your story is pretty fascinating in how you became involved in all of this. And this had to do with your father pretty much getting his business seized by the IRS, and potentially you your mother losing her home and all that, but you stepped up to bat and you said, well, I'm going to figure all this out. Tell us about that a little bit.
Well, yeah, it wasn't quite that simple, but or that visionary, I guess is the word. But here's what happened. My dad got in trouble with the IRS in the early 1970s. He had a small business here in our hometown of St. Paul, Minnesota, got behind on his employees withholding taxes, and in about 1974 they closed the print shop down. They auctioned the equipment off for just a couple cents on the dollar, and then in 1978, 79, they turned their attention to the family home and they tried to seize and sell it for the back tax liability. And that's when I got started. I came home one day and my mom was sitting at the table, with a letter in her hand, and she hands this to me and she says, "What do you make of this?" And I read the letter and I said, "Well, it looks like they're going to try to seize the house." And she says, "Well, what do we do about that?" Of course, I had no idea what to do. But what I did do, Dan, is I went over to the local law school and I started fumbling around the law library. And I didn't know what I was looking for or what I was doing. I was just literally flying blind and stumbled onto an area of the tax code that deals with taxpayers' rights issues. And I started reading in that section of the code, and I got, I didn't get more than 6 pages into it and discovered that the IRS was proceeding illegally to seize that property. So, I did what any 18-year-old would do under the circumstances. I just pasted together this Mickey Mouse lawsuit, and I sued the IRS.
How about that?
And it's a good thing I didn't know what I was doing because, the prevailing attitude at the time was that you can't stop the IRS. They can do anything they want to do. But I didn't know that, so I filed this lawsuit, and I found myself in a federal courtroom in Minneapolis in front of a judge. And I explained my case to the judge in very rough, unpolished terms. And the IRS flew this attorney in from Washington D.C. to argue his case, and he blathered on and on and on about statutes and court cases, and I had no idea what the guy was talking about. But when he was finished, the judge looked at him and pointed at me and said, "He's right, as in me. I'm right," he said. And he slammed the gavel, and I thought, well, this is easy. And so I stopped the IRS from taking the house, and I've been stopping them ever since.
Now, because that's such a fascinating story, because you unravel the idea that we somehow have bought into the paradigm, if you will, that the IRS just has this unbelievable power to be able to do whatever it wants to. How did we get to a point to come to those conclusions without really looking into it a little more?
Well, there's a couple of reasons for that. Number one, it is not an easy thing to look into from scratch. As I said, I didn't know what I was doing, and I was fumbling through it, and I had a bit of an advantage in that I didn't have the prejudices in my mind that you can't do this and you can't do that. But the fact of the matter is that the overwhelming majority of people do not understand that they've got any rights when they're dealing with the Internal Revenue Service. And I've been saying this for over 30 years, Dan, and as a matter of fact, the IRS's National Taxpayer Advocate has now finally admitted that the Internal Revenue Service does not tell the truth about taxpayers' rights. In fact, she did a survey, Dan, here not so long ago, where she asked the question of taxpayers as to whether they know what their rights are. And she said, and I'm quoting now, "Most taxpayers have no idea what their rights are and therefore can't take advantage of them. And even worse," she said, "IRS employees do not clearly communicate these rights to taxpayers at the proper times." Well, I'll tell you, they don't clearly communicate them at just about any time, never mind the proper time. And so when you've got this agency that has a lot of power, there's no question they've got a lot of power, and we see the IRS acting, you hear news stories about people having property seized and sold and so on, and these things can happen. There's no doubt about that. And so when you don't understand what your rights are and you're dealing with an agency that has power, then people's imaginations run away with them, Dan, and they start to conjure up all kinds of crazy things that the IRS can do, which if you know how to take advantage of your rights along the way, these things will never happen to you.
Right. No doubt about that. Now, as people pick up how to win your tax audit, the first thing they think about is tax audit. Now, that's pretty scary. I mean, even my own wife at one time was kind of concerned about being audited, and our CPA says, you won't have to usually worry about that. So let's talk about, first of all, what an audit is exactly and how the IRS decides who they decide to audit.
Yeah, that's a good question, and people, again, people's imaginations run away with them with the tax audit process as well. The audit process, Dan, is nothing more or less than the procedure the IRS uses to determine the correctness of a tax return. If you're being audited by the IRS, it doesn't mean you made a mistake. It simply means that the IRS is looking at the return to determine whether it is correct. And so let's just understand that right now. It's not a punishment procedure. It's not like dragging you off to trial and certainly not putting you in jail. It's just asking the question, is this tax return correct or not? And if you understand a couple of fundamentals about the audit, you don't have to be afraid of it, and then you're going to get out of the audit with your money in your pocket where it belongs. The first fundamental is what I just said. It doesn't mean you did anything wrong just because you've been selected for audit. All it means is that you kind of won the lottery, so to speak, or maybe lost the lottery is the better way to put it. But secondly, if you understand what the process is going to involve, all right? As I said, it's the examination of your tax return to determine its correctness. Your responsibility as the taxpayer, Dan, is to prove that your tax return is correct. This is what is fundamentally important, what people do not understand, and this is how they get themselves in trouble. The IRS does not have to prove that your tax return is wrong. In the garden variety tax audit situation that the vast majority of your listeners are ever going to face, the IRS does not have to prove you made a mistake. You have to prove you did it right. And this is the fundamental failure for people. They don't know how to prove that their tax return is correct. And so what I do in this book is I teach you exactly how to prove that your tax return is correct. And I show you step by step exactly what the IRS is likely to look at, both from the standpoint of the income on your deduction, the income on your tax return, and the deductions. And then I show you exactly how to prove that each one of those elements is accurate as far as your records are concerned. And that's the key thing right there.
Now, you take a look at the whole process. Now, first of all, you have the tax auditor, okay? And as you were talking about in your book, this is an individual that probably has relatively okay training when it comes to the tax code. Now, what I was astounded to discover as you were writing is the fact that the tax code itself has something like 4 million words.
Yeah,
now, that's an
right.
awfully big book.
Yeah.
And I can't imagine as somebody who's been in a position to train people to do a job that I could train anybody well, especially with the consistent changes that happen to the tax code. So basically what you're saying is there are a hell of a lot of errors the IRS could make that actually if you paid attention to what your rights are and you follow procedures, you'd come out of this thing probably okay more often than you wouldn't.
Yeah, you're exactly right. And first of all, let's talk about the accuracy of the tax auditors. The IRS's own internal statistics, Dan, indicate the tax audit results are wrong, 60 to 90% of the time. All right, depending on what issue we're talking about, they're wrong 60 to 90% of the time. I document this in the book. So it is not accurate that these guys come up with correct answers. Now the question is whether they're wrong intentionally or whether they're wrong by mistake, just like other people are. Well, let's give them the benefit of the doubt for a minute and say they're wrong by mistake. How could that happen? Well, you just put your finger on that as well. There's over 4 million words in the tax code, but that's the good news. The bad news is the tax code has been changed more than 4,600 times, Dan. Not 460 times, 4,600 times between 2001 and 2012. All right, so that 11-year window of time, 4,600 tax law changes. Former IRS Commissioner Charles Rosati was commenting about the high error rate that IRS personnel had in answering taxpayer questions, and he said, and I'm quoting now, "Fundamentally, we are attempting the impossible. We are trying to train our workers in areas that are far too broad to ever succeed, and therefore our training manuals and instruction booklets are way too broad in scope to be effective at any level." He's admitting, Dan, or admitted, this was some time ago, he's admitted that the IRS has no hope of getting it right because of the scope and complexity of this tax law.
Wow. And what's incredible is that you talk about so clearly one of the tactics the IRS uses quite regularly is the ability to bluff individuals who really, of course, if they don't know what their rights are, they're going to kind of buy into this. It's sort of like a stoolie that basically sells out the other criminal so they get a reduced sentence, so to speak. Now, one of the things you talk about that really began to really, I guess, boil my skin a little bit is that of the former IRS Commissioner Douglas Schulman, who was talking about how he can enact, I guess it's a way of saying streamlining, if you will, the idea of the third party. Talk about that in a little bit of detail and how the IRS was sort of like moving toward Big Brother, if you will.
Well, yeah, they're pushing toward Big Brother quite heavily here, Dan, for the purposes of getting on the front, establishing what they call a front-end tax system. Mm-hmm. And what that means very simply is that the IRS knows so much information about you. They've got access to so much data, both public and private data sources. Public data sources would be places like the Social Security Administration, local licensing agencies, marriage records, divorce records, property title records, those kinds of things. And then those would be public databases, things that are maintained by government, and then private databases would be maintained by private organizations, whether it's a bank's records, a mortgage company's records, records of vehicle sales, records from travel agencies, et cetera, et cetera. All these various things are private databases, and what the IRS is pushing for systematically is the ability to get access to all public and private databases on the front end of the tax filing season, so that they have so much information about you. They know everything you do, including when and how you do it. They have enough information to be able to attack your tax return even at the point you file it, and therefore then share that information with other federal, state, and local agencies, and even foreign governments. Wow. To allow them to enforce their tax laws. And this is the push that the IRS is involved in right now. I talk about this extensively in the book. It's actually the second chapter of the book, where I talk about the IRS and moving closer to Big Brother and establishing this all-knowing agency that has all of this information. Look, at the IRS says itself, Dan. This is a quote from their literature now, that they are a data-driven agency, and the more data they have, the more capacity they have to enforce the tax code. And as a matter of fact, another mantra in their literature is that where there is data, there is compliance. So as far as the IRS is concerned, there's no such thing as enough information, and certainly no such thing as too much.
Now, one of the most astounding things that I was curious about was the 1099 form. Now, I remember when I first started in business some years ago, I had the accountant who was helping me with this, and she said that anybody that you spend money with, that I think that's how it was, that you have to fill out a 1099. So they're at a point.
Well, the threshold is $600, Dan.
Okay, I couldn't. Yeah, you talked about that in your book, but the thing was, is the IRS is saying, on the one hand, we want to have all this information to make it easier for you, but yet we're going to demand all these businesses supply all these information forms.
Yeah, that's exactly right. Information forms come in two IRS documents. The first one is Form W-2. That's the wage and income statement that your employer gives you that reports how much income you earned from the employer and what was withheld and so on. The next one is the Form 1099. That's the one that you just said accurately, Dan, that you give to other individuals if you pay them more than $600 in the course of business. Between these two information returns, the W-2s and the 1099s, there are over 2 billion of these forms filed with the IRS every year. That's wow. Billion with a B, all right? Mm-hmm. Now, to put this in perspective, Dan, there's only 146 million income tax returns, personal income tax returns filed. So we're talking about, that's I'm not doing the math very quickly in my head here, but we're talking about almost 2.1 billion information returns wow. compared with 146 million tax returns. That's a heck of a lot of information that's flying around in the ether here. And just as an aside, the IRS can't figure out why they're being victimized by identity theft.
Wow.
We've got all this information flying around that's got names, addresses, and Social Security numbers on it. Most of the stuff is filed electronically, not all of it, but most of it's filed electronically. You hack a company like, what have we seen in the news here lately with some of these major companies being hacked, mm-hmm. like Target Corporation, for example, Home Depot got hacked, a couple of the other ones got hacked. You hack this information, you're gonna just have a gold mine, if you're a criminal, a gold mine of information available to be able to steal identities with, and who knows what else. And the IRS is in a large way responsible for this, because they're creating these information requirements, they're creating the responsibility to file all these doggone forms, and And it's not getting smaller. The burdens aren't getting smaller. Every year, Dan, they come up with more and more and more reasons to file more information returns.
Wow. I think that just gets to be a little too overwhelming, doesn't it?
It does. I mean, look at one of the things I talk about in the book was the Obamacare Affordable Care Act that passed in 2010. One of the provisions buried under about 2,500 pages of this Obamacare law was a requirement that more information returns be filed, not just on individuals. In other words, if you had a business transaction with an individual, that's where that 1099 requirement comes in. But if you're doing business with a corporation, in other words, your business pays another corporation or LLC or partnership, not an individual but an entity, there's no responsibility to file a 1099 on that transaction. It only has to do with individuals. Well, the Obamacare law included a provision that would require businesses to report their transactions on other businesses. That would have increased by 20-fold, 30-fold, 40-fold the number of information returns filed. Think about it for a minute, Dan. How many corporations do you do business with that you are paying more than $600 a year? The phone company, for example. Your internet service, for example. Just go down the list. All of these, you're making car payments to a corporation. Your house payments go to a corporation. All of these things would have been under the law would have created a requirement to file these additional 1099 forms, and there would have, if there's $2 billion now, there might have been, who knows, $30 billion filed under the provisions of that law. Well, we complained about that. A lot of us put pressure on Congress to change that. I did a lot of speaking and writing about that provision after it was passed because it was, secretly included in the Affordable Care Act to begin with. And Congress finally repealed it. But who's pushing this stuff, Dan? It's the IRS that's pushing it.
Mm-hmm. Now, we've talked a lot about how the IRS is what it is, and people can look at this and go, those son of a guns, whatever language you want to use. But let's go ahead and talk about the reality now. So you've been issued a letter by the Internal Revenue Service with the intent to audit, okay? What are the steps that people can anticipate they should take once this process gets moving?
Yeah, that's a good question. And let's talk about a couple of things here to do and not to do. First of all, you don't want to panic. As I said, your return is not necessarily wrong. It's been selected, essentially pulled out of the hat. There's a couple of reasons why they do it, but essentially it's been pulled out of the hat. So it doesn't mean you made a mistake. So don't go into defensive mode where you're saying, well, I just want to minimize my losses and get out of here. As I said already, the burden of proof is on you, so you got to understand that. The second thing you want to do, Dan, is make sure that you identify the issues that are in question on the return. Sometimes you'll get a letter from the IRS that does not specifically tell you what they're looking at. And you want to make sure that you determine what the issues are so you know exactly what proof you need to get together. If they're asking you for a face-to-face meeting, don't be pushed into a conference that you're not ready for. You've got the absolute right to determine where and when that conference will take place. I talk about this in the book, and you cannot be pushed into a conference that you're not prepared for. The next thing you got to do is gather the records you need to prove your claims. If they're challenging your mortgage interest or charitable contributions or business expenses or whatever it may be the question, get the documents together, the receipts, the cancel checks, the invoices, and so on, to prove your expenses. And if they're looking at your income, if they're questioning your income, which they do more and more and more, then you need to get together your bank records and income statements and whatever other documents you need to show that your income is correct. And that is a process that I describe in great detail throughout the book, so you know exactly step by step by step what to do.
Now, one of the most interesting things about the tax auditor themselves is the perception I think the public has unknowingly about how much real power this individual has. Now, again, as you pick up the book, How to Win Your Tax Audit, you'll realize this guy has very little power whatsoever.
Well, yeah, as a matter of fact, he's got next to no power, Dan.
Right.
People think that the
so
tax
like
auditor...
a clerk at a 7-Eleven almost.
Almost, yeah, almost. People think the tax auditor's got the power to put you in jail. He can't do that. They think that he's got the power to file a lien against your house. He can't do that. They think he's got the power to levy and seize your assets or your bank account or paycheck. He can't do that. He can't even change your tax return, Dan, without your consent. The only thing the auditor does is make a recommendation, And if you disagree with the recommendation, you've got the right to appeal. This is one of the most important rights you have as a taxpayer, the right to challenge the IRS and the right to be heard. And that's an absolute right that can't be taken away from you unless you waive it. And if you don't understand what you're doing, then people waive these rights all the time. Mm-hmm. But if you don't waive the right, you get your case in front of the appeals office, and as I said earlier in the program here, Dan, the IRS's audit results are wrong 60 to 90% of the time. So when you get yourself in front of the appeals office, that's where you're going to win your case.
Now, you also talk about how often they are allowed to audit. That's another thing I think our listeners should have some clarity about.
Yeah, that's exactly right. People don't know that. They think the IRS can do anything it wants when it comes to auditing and collecting. And as far as the right to audit a return is concerned, the IRS can only audit your return one time per tax year. That's it. They get one look at it, one bite of the apple. And there's a statute of limitations, Dan, on the IRS's right to audit the return. And that statute of limitations, generally speaking, there's some exceptions to this, but the general rule that, again, the vast majority of your listeners are going to go by is the 3-year rule. And what that means is the IRS cannot examine your tax return after 3 years from the date the return is filed. So let's take the 2014 tax return, for example. That's the one that we're getting ready to file right now. That's going to be filed April of 2015. So you count forward 3 years. After April of 2018, the IRS will not be able to look at that return anymore.
Well, there you go, folks. See, it takes a while, but generally you're going to come out of this pretty much more often than not ahead. But at the same time, it's pretty fascinating what that front row agent tends to typically do, which is some strong-arm tactics. Tell us about some of the things that they try to do to get you to kind of go along with whatever their recommendation is.
Well, there's a number of ways they approach it. In fact, I testified before I was a consultant of the Commission on National Commission on Restructuring the IRS, Dan, and I provided information to the Commission on how the IRS uses bluff and intimidation and misinformation and disinformation, and there's a lot of strategies they use, and sometimes it's a good guy approach and sometimes it's a bad guy approach. The good guy approach might be something like, well, Mr. Taxpayer, we've disallowed these deductions here, and you owe us $7,000, and I realize that's a lot of money, but the fact of the matter is that you made a mistake here on the return, and now we got to go ahead and collect this money, and you got the right to appeal here, but if you appeal the case, the penalties and interest continue to run, and we win these cases. Obviously we know what we're doing here, and we're not just trying to cheat blind, so, you might as well just go ahead and sign this waiver form and get on with paying the taxes. And you can set up an installment agreement. So if you can't full pay the tax, we understand that, and we're willing to work with you. That might be the good guy approach. Whereas the bad guy approach might be something like, if you don't sign this form, we're going to look at your other 2 tax years. We've looked at 1 tax year, let's say 2012, but if you don't sign this form, we're going to look at other tax years as well, and we can go back and we can go forward. Now this guy might give you the impression that the IRS can look at all kinds of other tax years. First of all, we already talked about the statute of limitations, so that right away is limited into what they can do. And secondly, the fact of the matter is, Dan, if they're going to audit tax returns for more than 1 year, they do that on the front end. They don't necessarily, they don't hold that over your head and say, well, if you don't cave in here, now we're just going to use that as leverage to get to these other tax years. The fact of the matter is the IRS's policy typically is to look at the 3 open years at once anyway. And so if they haven't already done that, the fact is that the threat is probably hollow.
Now, the other threat that I think would be one of the most awesome threats that can certainly allow a lot of people to cave in is that of what we talked about earlier, the third-party contact. This could be your bank, your employer. It could be people that you do business with if you have a small business, friends, neighbors, cousins. I mean, it went on, and I thought, really, how far can these people actually go? But you say, wait a minute. You can decide who they talk to and when, and the whole bit, I believe, right?
Well, yeah, you certainly can set the stage early on, but here's the thing to understand, Dan, that is not going to be, the threat to contact third parties is not going to come at the end of the audit. And it's not going to come as a means of trying to induce you to sign off on an audit agreement that you don't, an audit decision that you don't agree with. That's not where that comes into play. That comes into play on the front end, where you're dealing with the IRS agent, and he says, oh, well, I want to contact your employer, I want to contact contact this person, I want to contact that person. Now, Dan, you have to put them on notice that you don't want them contacting any third parties, and you want to make it perfectly clear to them that you have the capacity to provide the information they're looking for, and you are going to provide the information that you're legally required to provide to keep them from going to third parties. And that's important to understand.
I think it's very important to understand, again, people kind of look at these particular agents of having a lot of power, and I think sometimes the misconception is, geez, I'm about to get audited by a tax auditor. There's a chance I can go to jail. How did we ever come to those kinds of conclusions?
Well, we came to those conclusions precisely because the IRS publicizes in the spring of the year, celebrated cases of people who went to jail.
Okay.
You see it. You remember the Wesley Snipes situation? He ended up in jail for tax crime. You remember years ago, Leona Elmsley, the real estate tycoon in New York. She ended up in jail. There's been a lot of these celebrated cases over the years, and the IRS publishes these things in the spring of the year, precisely for the purpose of giving people the impression that if you don't roll over and turn out your pockets when the IRS tells you to, that you're going to go to jail. But the fact of the matter is, Dan, that is the least likely scenario for any taxpayer is ending up in jail. I mean, I'll just give you, and I talk about the statistics here a little bit too in the book. I said already there's going to be about 146 million tax returns filed this year. Well, there's only going to be about 5,000 criminal investigations, not 5 million, 5,000 criminal investigations. I mean, you can't even come to a number because of the rounding. That the number just disappears, right? The percentage disappears in the rounding is what I'm trying to say.
Right.
You've got a better chance of being eaten by a shark than you do of ever going to jail for a criminal tax crime, and that's the important thing. If you go through a tax audit and the IRS finds a mistake and they disallow this or disallow that because your records got lost, or you made a mistake, you used this form instead of that form, you zigged when you should have zagged. That happens all the time. That doesn't mean you're a criminal. It means you got tripped up in one of the over 4 million words in the tax code. That's all it means. In order to be convicted of a crime, you have to deliberately and intentionally set out to break the law.
Right.
All right, so that requires deliberate intent on your part to evade the taxes. That means filing a knowingly false tax return, hiding income, fabricating deductions, using 2 sets of books to scam your income and your expenses, that sort of thing. Very, very, very few people do that.
And that's just it. You keep pointing out over and over, most people, a fair majority of them, intentionally try to do the right thing because what do they want to do? They want to go about their day without being bothered by another government agent.
Yeah, that's exactly right. Dan, who wakes up in the morning and says to themselves, I'd like to get in trouble with the IRS today. I wonder how I can tick off the IRS.
Yeah, maybe invite them over for breakfast while they're intimidating me.
Yeah, I know. I'll file a false tax return. Well, that should get their attention. I mean, there's criminals out there. There's no question about that. But the vast majority of American people not only do their level best to comply with the tax code, Dan, the vast majority of American people overpay their taxes.
Now, what I found really fascinating, especially when you weave a couple of the stories in on this, is the economic reality audit. Describe what that exactly is. That one was a really interesting one.
Yeah, the economic reality audit is the audit philosophy that's driving the IRS more and more these days, and that is based on the proposition that every American taxpayer cheats on their tax returns. Now, that's 100% contradictory to what I just said.
Right.
The vast majority of people do not cheat on their taxes. The vast majority of Americans do their level best to comply with the law, but the IRS believes that people are cheating on their returns, not so much by overstating deductions. The fact is that fewer and fewer people are claiming tax deductions at all anymore to begin with. Over 70% of the returns filed, Dan, are 1040 short forms that don't claim any deductions at all, just the standard deduction. And so there's quote unquote nothing to audit with that tax return except the other side of the equation, and that is the income. The IRS is focusing on the income side of the ledger, A, because more people are not claiming deductions, and B, because this is where the IRS believes most of the cheating occurs anyway, is in understating income as opposed to overstating deductions. So the economic reality audit focuses heavily on the income side of the ledger, and this is more of an investigative audit rather than a verification audit. What I mean by that is this: the typical tax audit asks you to verify that your return is correct. If you've got a claim for mortgage interest and charitable contributions, for example, the IRS says, okay, you wrote off X thousand dollars for these two things. Bring in your receipts and your canceled checks and prove it. And when you do, out the door you go. But under an investigation audit or investigative audit, the IRS asks the question: do you have the capacity to pay these expenses? Okay, you verified them, that's true, but now does your lifestyle match your earnings, or more accurately, does your earnings match your lifestyle? And based on your lifestyle and based on your reported earnings, is it likely that you've underreported your income, thus giving you the capacity to make these charitable contributions and pay this mortgage interest? Mm-hmm. And that becomes a far more intensive investigation into your finances than a typical tax audit ever would have been.
Mm-hmm. You know, Dan, I just wanted to bring that up because there was the one story in there you were talking about a couple who was going through a tax audit, and one of the things that the auditor was bringing up is that he wasn't claiming what was known as barter income.
Barter income, yeah.
Boy, that's an interesting one.
Well, yeah, and I give the example in the book of the guy that helps his brother-in-law. He builds a garage, and his brother-in-law comes over and helps him, and his brother-in-law is an electrician and, provides all the electrical services, and then in exchange for that, the other guy goes over to the brother-in-law's house, the electrician, and lays tile for him. Well, the IRS takes the position that that's barter income. The value of the services that you get from somebody is the fair market value of those services the IRS considers to be income. And most people don't know that. The vast majority of people don't know that. And this is one of the areas that they get tripped up in.
Now, you talk about the secrets of effective communication, because now here you've gotten this letter, then the next step is responding to that letter, and you say that typically what people tend to do is they start running and hiding, don't they?
Yeah, they do. I mean, I've been in this business more than 30 years, as you mentioned at the top of the program, Dan, and I've seen every kind of tax case you can imagine, and I've dealt with literally thousands and thousands of people over the years, and it just never ceases to amaze me how folks get letters from the IRS, and they just don't deal with them. They stick them in the drawer. They just ignore them. They're afraid to open them, or they get certified mail from the post office, and they don't go pick it up because they're afraid of what the letter might say. This is the absolute wrong way to go about dealing with this agency. I've said 5 times during this program that you've got rights as a taxpayer, and if you know what those rights are, you're not going to be run over by the IRS. Well, the fact of the matter is, Dan, every single one of those rights is time sensitive. All right, you got to take action within a stated period of time, or you lose your rights. Mm-hmm. And this is what happens to folks that don't deal with their mail. If they stick the letter in a drawer, or they don't pick it up from the post office, I've seen time and time and time again where their rights expire. And now you got to do something a little different than you might otherwise do. Now, the good news, of course, is there's a lot of procedures that are available for dealing with problems. But the bad news is that your primary rights run out, and now you got to come at it from generally a more difficult angle.
That you probably actually have to hire legal counsel as well.
Well, certainly, possibly. Yeah, that could very well be true for sure.
Now, there's something that I wanted to bring up, because when it comes to procedures, we've been talking about here in the program, okay, so you get the letter, you respond to the letter in kind, because, it's all about communication, allowing them to know what you know about your rights. So you really establish yourself as being in the know, so to speak. So that's got to be very encouraging for the person who's receiving this letter, and then it takes the next step for the actual audit process, and then challenging that if they come back and say, look, you understated, so you owe us a bunch of money, and you say, wait a minute, I'm going to challenge this on an appeal. I would guess, because of what you're saying, that as people follow these procedures without fear, because, look, your chances of going to jail, like you said, you're going to end up being eaten by a shark faster than you're going to go to jail. But the fact is that you follow these procedures, that there's really a really strong likelihood that, okay, you win your appeal, we made a mistake, next, and they just move on.
Yeah, you're absolutely correct. As I said, you win your case 60 to 90% of the time. The fact of the matter is the appeals office, and here's something we need, as long as we're on the subject, people will say, well, gee, Dan, is it going to go worse for me if I appeal? If I appeal my case, are they going to get ticked off and start looking at me more closely?
Right.
Is an appeals officer going to decide to look at, issues that weren't raised by the original auditor, or is the appeals officer going to somehow expand the audit? Look at the written job description of the appeals officer is to negotiate a settlement with the taxpayer. That's their job. The IRS has got written rules of procedure for the appeals office, and those written rules of procedure very clearly and unequivocally tell appeals officers to not open issues that were not already opened by the auditor. So in other words, and this is important because people think that they're going to make it worse, and they're going to, the tumor's going to metastasize and blow up, and spread into all these other organs just because we did this appeal. There's zero chance of that happening. I'm not saying a slim chance. There's a zero chance because the written rules of the appeals process mandate, and the IRS appeals officers follow these rules, Dan, okay? The written rules mandate that they do not open issues that were not opened by the examiner, and furthermore, if an examiner resolved an issue favorably, they're not going to go back and revisit that either. So you got no chance of making it worse. You got no chance of having them reopen something that's already been settled in your favor. You got no chance of them going into some other tax year to expand the scope of the audit. The appeals, the worst that can possibly happen to you as a result of taking an appeal is that you're not going to win it. And depending on the issue, it depends on the facts, of course. If the IRS is wrong half the time, they could be right half the time. So there is that possibility. But here's the other thing that happens in these audits, Dan. It's never a one-issue audit. I shouldn't say never, but very, very rarely is it a one-issue audit. You might go through an audit, and the IRS the tax auditor might change 6 items on your tax return. Well, you might look at that report and say, well, they're wrong about 4 of those 6 things.
Sure.
And so now you take your appeal, and of course you agree with the 2 things that the auditor's right about, but the other 4 issues, you've got a very, very good chance of prevailing on those other 4 issues. So, it's not an all-or-nothing proposition is what I'm saying. You might get to appeals and only win 3 of the 4 issues that you raised. You might win 2 of the 4 issues that you raised, but you will be better off because of the appeal than you were signing off on the audit.
So what you're clearly saying is when you get an audit that certainly disfavors you, you're always better off appealing that.
Absolutely.
No.
Yep,
I love that.
question.
Now, I know one of the, call it bluffing tactics that they would use at a point like that is, well, you really don't want to go and appeal something like this, because you're looking at maybe bringing in attorneys and extra costs, and in the meantime, as they say in the streets, the juice is running. But that's not really what happens, it sounds like.
Well, it's not what. First of all, you got the option to hire counsel if your case is getting complicated, or you're in over your head, or things start to go south, and you would certainly want to consider counsel. And you've got the right to stop the proceedings at any point along the way to get counsel. So that's very important to understand. Mm-hmm. That if you start with counsel, you're not. I should say, if you start without counsel, you're not stuck. You always have the right to bring counsel in at some point along the way. That's the first thing, and so that's important to understand as well. And then the other thing would be that as the case progresses, you're going to owe penalties and interest, Dan, only to the extent that you owe the tax.
Right.
So let's take our scenario where we got 6 issues and we appeal 4 of them. Well, if you end up winning 3 of the 4, you don't pay interest and penalties on the issues that you win. You only pay to the extent that you lose. And now, as long as we're on the subject of penalties, let's talk about another thing that I talk about in the book at length. And that is, even if you're wrong with the tax liability calculation, that doesn't mean you owe penalties. You see, the IRS will automatically add penalties to almost every tax bill.
Oh, sure.
But the penalties can be removed, Dan, when you can show that you acted in good faith and based on a reasonable cause for your actions and did not deliberately disregard IRS rules and regulations. So it may well be that you owe the tax, but you don't even owe the penalties associated with the tax that you owe because of your good faith and the fact that you didn't deliberately cheat, you didn't deliberately disregard rules.
So it sounds to me in some ways that the IRS bears the burden of proof to prove that you were trying to cheat.
Well, no. That's okay. Only true in a criminal case, Dan.
Okay.
If the IRS charges you with a crime, that you could go to jail for, and again, that's extremely rare. You're going to bet, it's so rare that it's not even measurable. They would have to prove the case to a jury beyond a reasonable doubt. But in a civil case, whether we're talking about the tax liability or the penalties, the burden's on the taxpayer. So if you're trying to get rid of the penalties, you have to demonstrate, you the taxpayer have to demonstrate that you acted in good faith and based on a reasonable cause for your actions. And I show you how to do this in the book. I show you step by step what that good faith, reasonable cause is all about and how to present it.
Well, like I said in the beginning of the program, Dan, you pick up this and you think, how to win your tax audit. This is going to be one of those kind of books that's going to be dry and loaded with a lot of information. One thing it's loaded with a lot of great information, but what it isn't is dry. I found myself sometimes jumping in chapters, and I'd start to read one paragraph, and then all of a sudden I'm going back to the beginning of the chapter and reading through it going, wow.
Yeah.
And you really have a strong sense of personal empowerment, as you should. I mean, as you were saying, as we agreed earlier, a lot of us are out there just being honest, hardworking people trying to design a lifestyle that we enjoy. The last thing we want is some outsider coming in and rocking our world telling us, well, you're doing it wrong, and as a result, we're going to punish you for doing that. And once you remove a lot of the myths about what the IRS can and can't do, especially depending on the level of who you're dealing with, you realize you're empowered, but it's all about taking action and certainly being knowledgeable about what action you're supposed to take.
Well, and I worked very hard to achieve that, Dan. So I appreciate you saying that. And here's the other thing I would add to that. This book is written to readers that don't have a tax or financial background.
Okay.
This is written to folks who, Jane and Joe American, and if you can read the English language and follow just simple logic, then you're going to get your way through this very well, no doubt.
Well, chances are what you're probably also doing is inadvertently sprouting a lot of young saplings who are going to become like you in 20 or 30 years, and so much for the Internal Revenue Service.
Well, let's hope so.
Now, tell us about your website, and I know that you also have a newsletter that you put out that also updates and lets people know what's going on in the tax world and the tax codes and things that we should be staying up on.
Yeah, that's exactly right, Dan. We do have that. My website is taxhelponline.com. It's all one word. There are no spaces of any kind. Taxhelponline.com. And on the website, we have a lot of great information, some free research reports that folks can look at, all kinds of things like that. And also my books are available there. And I will tell you, Dan, I'll tell your listeners that, we also offer some webinars. And so if you go to the website, taxhelponline.com, you can click on the webinar tab there, which is on the right side of the home page, and you can get our webinar information. It's free webinar information, and so you can attend these webinars as well. And the book is available at the website. The book is available at all the usual places. It's called How to Win Your Tax Audit, and again, the website is taxhelponline.com.
Certainly a book to keep in your library. Now, Dan, before we go here, what I'd like to do is talk about something you're seeing a lot more of, and that is telephone solicitation and online demands from the IRS that really amount to nothing more than scams. How can people be aware that that's happening? In other words, what does the IRS do differently that a scammer doesn't seem to understand?
Yeah, okay, that's a good question because we are seeing a lot of it. First of all, if you get an email solicitation of any kind whatsoever, I mean whatsoever, Dan, that's automatically a scam if they're claiming to be from the IRS. The IRS does not, N-O-T, not communicate with taxpayers through email. As a matter of fact, I'll go a step farther. I've got power of attorney in a lot of cases where I represent folks before the IRS. And so even with my power of attorney pending, and even with the establishment of a personal, professional relationship with a tax person in a given tax case, they will not communicate through email. All right, they just won't do it because of the risk of being hacked.
Sure.
So if you get an email in your inbox that says, you owe the IRS money, you better use a credit card and call this number, that's an absolute scam. Mm-hmm. The second thing is phone call scams. We get, and I talk about this in the book at length, and I give you a couple of examples of how these people phone call. First of all, when you got to listen to the syntax of the language that these people are using when they call you. All right. I mean, if it's very, very obviously somebody that's not educated in the English language, that would be your first clue. But the second clue is this: any threat, Dan, that is made over the telephone, that if you don't pay X dollars now, we're going to send the sheriff out to arrest you, or the marshal out to arrest you, or the police out to arrest you. That is absolutely not how the IRS operates, all right? As bad as that agency can be, they will never call you up and say, you better pay your taxes right now or we're going to come out and arrest you in the morning. That does not happen. Okay. And so those are the clues that you need to keep in mind.
So the truth of the matter is, because I was told this by somebody, I thought, well, that seems kind of extreme, that an IRS agent can show up at your door, demand payment, he'll bring the sheriff, and the next thing you know, you're being hauled off to jail. But it's a lot more than that. I mean, there are a lot of steps before you even come to something like that.
Well, that's exactly right. There's 56 steps before you come to that point. And even if you go through all those 56 steps, Dan, if we're talking about a dollars and cents case, in other words, you just owe the IRS money, and whether it's a lot of money or a little bit of money, you do not run the risk of going to jail because you can't pay them. So there is zero chance that they're going to call you on the phone or even show up at the door and say, give us $30,000 right now or $3,000 right now, or we're going to come back tomorrow and arrest you. That does not happen.
Well, I got to say, Dan, I want to thank you, first of all, for being back on the program. Always a pleasure to have you here, and certainly you have provided what I would consider true tax relief.
All right, well, I appreciate that, Dan. Thank you.
Go ahead and
give
out that website again one more time.
Yeah, the website again is taxhelponline.com. It's all one word, no spaces of any kind. Taxhelponline.com. The book is available there, and you can look into my webinars there as well.
Very good. Dan, thank you for joining us here on the Beyond 50 radio program. What a pleasure.
My pleasure. Thank you.
We want to thank you, the listeners out there. So find out by learning more. You can get yourself empowered so you don't have yourself kind of following blindly with the myths that get you to make decisions that you know you're going to regret later. The book is How to Win Your Tax Audit. You can also find out more. Visit us at Beyond50Radio.com as well. I'm Daniel Davis. Thank you for tuning in. This is the Beyond 50 radio program. And remember, live your day past halfway.